The total investment volume for the Paris region reached 4.3 billion euros at the end of June, showing a decline of 13% compared with last year. This is the reflect of the exceptional activity of the investment market in 2012, with 3 sales exceeding 500 million euros each. During the first semester, the investment market achieved almost the same level of activity on the large deal segment, with 10 sales above 100 million euros. Globally, since the beginning of the year, the investment market shows a healthy activity on any segment by size. For example, we can retail a strong improving on the mid-size segment, with nearly twice more deals and volume than last year. Even if office remained the highly dominant asset class in the Paris market, the retail investment shows an excellent performance this year with a 15% market share. This good level of activity is the result of large sales in the Champs-Élysées during the first quarter. The forward funding market that recorded no transaction at Q1 demonstrated a better activity this spring with 3 sales. Amongst these, we can mention Le Nuovo, partly let to L'Oréal and acquired by Cardiff and Sogecap for 190 million euros. In terms of players, the investment market was dominated by the French investors with nearly 2/3 of the total volume, followed by the global investors and the German. Even if we can't see the same diversification than last year in terms of capital flows, the overview could change before year-end, as some sovereign funds are currently working on 1 to 2 billion euros acquisitions. The prime yields stabilized this quarter, with the CBD prime standing at 4.5% and at 6% in La Défense. Given the number and the size of deals currently identified, we anticipate the total investment volumes for this year should reach 12 billion euros. Despite the rise of the French government bonds rates in May and June, the risk margin offered by the real estate investment in Paris is high enough to anticipate the stability of the yields in the coming months. Given the number and the size of deals currently identified, we anticipate the total investment volumes for this year should reach 12 billion euros. Despite the rise of the French government bonds rates in May and June, the risk margin offered by the real estate investment in Paris is high enough to anticipate a stability of the yields in the coming months.